right, so this is where we left off. We finished doing the cost of materials, okay? So here's the next thing that happened, all right? We finally received a bank statement from the main Bank of Nevada, and this is what happened. On June 23rd, okay? We were, in this case, so June 30th, we got charged service fees, okay, of $50, okay? We had overdraft charges for $118.30, and then we wrote a couple NSF checks, which, if you read down below, says here, overdrafted by $2,240. And remember, it's 22% interest on top of overstated charges. So in this case, it's a one-time, it's this 22% gets tacked on to your balance at the end of the day, regardless whether you made a payment or not, because you use the overdraft protection. Okay, so here you go. Those are the details on that. And every NSF check is $25 per NSF check. And in this case, we wrote quite a few. Okay, we wrote 4 of them. Check number 15, 17, 22, 24, and 25. Okay. So there you go. We have our bank statement charges. Okay, so what do I need to do with these bank statement charges? How do I journalize this?
As bank fees?
Yes, these are 100% bank fees. Okay? Okay, account number. Let's see what bank fees is. Bank fees are $6,100. Okay? All right. And usually what happens when you receive a bank statement, right, and you have all these charges listed, what usually happens to your checking account?
It is lowered
It is lowered, right? Because why?
because they just take it.
They just take it, exactly, right? They don't even notify you, or they don't warn you ahead of time. They just take it away and be like, here's your bank statement. This is the charges I made. You can either call back to dispute it, or this is what happened. Okay? So in this case, it's taken out from your checking account immediately. You don't need to pay for it because it's already taken out. Okay? So it's taken out from your checking account. Okay? Now let's calculate how much total is my bank fees. Okay? So we have 50 plus 118.30 plus 100. I have $268.30 worth of bank fees. Okay? Yep. $268.30. Okay? And then what do you want to have your note to say?
Just bank fees.
Okay, you can do bank fees. Okay. So let's go ahead and update our ledger. Okay, so bank fees. All right, and you could be specific. You could say service charge $50. Overdraft 22%, which was $118.30, and NSF for checks for $100. Okay. Post reference, we're still on page 22 for $268.30. Okay. And of course, you need to update your checking because they take it out immediately. Okay, so what's your ending balance on your checking account?
$13,425.28.
Good. So that's that right there. Now it says enter credit card statement for June from National Bank website. So again, you went on the website to find out all this information. So online banking. So let's take a look at the statement. It says right here, statement date was June 30th. Okay. The balance on the credit card was $1885.89. Okay, due date is going to be 7/10. The amount of interest that was collected was $28.29. Minimum payment is $50. And the current balance on the account is now $1914.18. Okay. So what do I do with this? What do I do with this? It says down here saying that you're going to okay, you're going to record this bill. Assume that you will be paying the entire balance on the due date. Okay, use interest payable for the interest that is accrued for this transaction. Okay, so in this case, right, we have a credit card, right, statement. Right, we have amount that's due, but we also have interest that's included. Interest is not part of your credit card expense, okay? It's a separate fee that is paid because you had that assumption, right? So in this case, it's interest expense to me because I have to pay this company on top of the money that I used. I have to pay a percentage to interest. Okay, so how should I journalize this? I have to record this as a bill. Okay, so how do I record this as a bill? There are a couple of ways that you can journalize this. But how do I enter in a bill? Assuming you're going to pay all of it on the due date.
You're gonna use Visa payable, right?
You would, yes, because the assumption is you're going to pay the credit card off, right? But are you paying for it now or are you paying for it later?
Is it notes payable or?
Okay, notes payable is when you finance and make payments to something and breaking it down.
Accounts payable.
Yes, right? Accounts payable, right? We know to use it as when you see a bill, you enter it in, it's going to be accounts payable. Okay, so good. Okay, now in this case, am I going to be entering in 1885 or I'm going to do 1914? What amount am I going to be journalizing?
The 1885.
The 1885, right? Because in this case, right, that's all that I owe on my credit card. I don't owe 1914. Okay, so it's accounts payable is 20,000. So I'm going to be paying 1885.89, right? And that's how much is on my Visa payable. Okay? For the 1885.89. Now, what else do I need to include into this right here? Because I owe National Bank Visa more than 1885. I owe them 1914. What is this $28.29?
Interest.
It's interest, right? Am I paying the interest now or am I going to pay the interest later?
Later.
So, what do we call that? If you owe money to somebody, what do we call that?
It's a liability, right? But which one?
Well, what is this?
Oh, I see it now. Interest payable.
Interest payable, right? Because we owe National Bank Visa, but it's not part. It is in correlation to the credit card, but it's not what you owe on the credit card, right? You don't owe $28.29 because you didn't charge something for $28.29. It's a separate charge that the credit card company is holding you accountable for, right? They charge you because you agree to the terms that if you borrow money from them, that means you are subject to have to pay this much interest. Right? So good. Interest payable because we're not paying it now, we're paying it later. So interest payable is $27,500. So if I have to create an interest payable account, right, then what should be my equal and opposite debit in this case, right? Because if I incurred an interest payable, right, which is a separate charge from my credit card, and I owe it, so therefore, what other account am I going to use to say that I either spent or used this money for having a credit card? What account would I place this under that I have to incur? Okay, so what does the $28.29 represent?
Interest.
Interest. And if I have to incur it for the month of June,
Interest income?
not income.
No.
That's when you generate it. When you charge other people money or a percentage for owing you money.
Interest expense.
Interest expense, yes, because in this case, this is money I had to spend on interest for the month of June because I used a credit card. This is a separate charge from the credit card. You still owe the company, but this is the interest that you incurred. Right? So in this case, interest expense account is going to be $64.50. Okay, and we incurred it for $28.29. Okay. Now, yes, there's other ways that you can journalize it if you really wanted to, and not claim that you have interest expense and just put it all into accounts payable. Technically, yeah, you can do that. Oh, I think I did this backwards. It should be Visa payable because we're decreasing the Visa payable. And we're putting it under as an accounts payable. Sorry. Okay. In this case, you could have just put them all into one, but again, if you owe the interest, right, it makes it's gonna be a little difficult to put into the accounts payable like this, okay? However, so when you do incur interest and it is a separate charge, general rule of thumb is you should definitely separate it. But again, this is one of the correct answers that you could have done. Again, you could have just said, I incurred interest expense and I'm going to pay it later by putting it under an accounts payable. That's completely fine as well, too. But in this case, I want you to separate so you know how much money you paid besides the credit card. I want you to rack up how much interest you've collected for this so you can build a profile of how much extra money you had to spend for having these things. Okay. So there you go. All right, and I'm going to say we're going to be entering in a bill. What's my, let's see. Okay. So I have the National Bank Visa credit card statement. Okay, so who do I owe? All right. So let's go ahead and do my ledger first. So first things is we have a Visa payable. And we're going to debit this. Right? And you could say received bill. $22, and we debit it for the $18.85.89, bringing my account back down to zero. Okay. You could also, if you did not want to recognize the bill itself, you could not record and then assume that the day that you pay will be the day that you will clear this amount off of your credit card. That's also another way that you could have done that. We didn't have to journalize this transaction because we weren't paying for a credit card. It's kind of funny to pay for a credit card or just record the bill when it's not really necessary to have to do. But once again, this is one of the correct answers you could have done with this entry here. Okay. So there you go. I have the bill. Okay. We got interest expense. Okay. Interest expense. Right. Visa. I think they charge you 18% interest. In June for $28.29. Okay. And now we need to enter it into the accounts payable because now we're saying we received the bill, but now we owe it. Okay. And I'm going to go ahead and write National Bank Visa statement. And we owe 89. Okay. So grand total that we now owe is going to be $5,771.10. And then, of course, on top of that, we also owe interest that was collected on that credit card. Since we received a bill from National Bank Visa, right, we need to also update our subsidiary ledger because we owe them money now, right? We received a bill from them, so we need to recognize that we owe them money. Okay, so subsidiary ledger under vendors. This is National Bank Visa. Okay, here we are. you can either use this empty line here, or you could just go ahead and just do a new line here. Since I've already created this line here, I'll go ahead and just enter it in here. Okay. Now, in this case, right? Invoice, we don't have the bill number here, but the post reference is General Journal 22. Terms, it's due on the 7th. Let me see. It's due on 7/10. So terms is what? It's going to be date driven. So it's going to be the 10th of every month. Okay. So that means the actual due date is going to be the 10th. So in this case, 7/10 is our first billing date. Okay. And the invoice amount. Now you have two choices that you want to do here. You can either add the whole entire amount and include the interest, or you can enter in what the bill statement is and then enter in another transaction for the interest. In this case, I'm just going to save some space and not waste it and say that I owe 1914.18. Okay, because that's what the bill statement said. So what you're going to do here is I'm going to also enter in a note since I have the 18% on outstanding interest. So I can say June interest was $28.29. This one, it doesn't really matter on the specifics of what these things are. But when you categorize them in the transaction, it's important to know the difference of what you're actually owing and what you actually are paying to interest, okay? Because in this case, right, I can't say my Visa payable is worth $19.14, right? Because that's not true. I only spent $18.85, right? And yes, you could also have done this as well too. If you wanted the Visa payable to reflect the $19.14, yes, you could have used the Visa payable to pay for the interest that you've incurred as well. And then when you enter in the bill, it would be for the $19.14. Again, that's another correct way that you could have done that. But in this case, I'm going to do it this way. All right. So that means I owe National Bank Visa credit card a total of 19. Oh, I think I missed a number. I owe $19 again. I missed the number again. Okay, it's not working. So I'm just gonna, there you go. Copy that, it's 1914.18. Okay. All right.
Oh, it's because you have two periods or whatever.
Oh, okay. Thank you. 1914.18. Thank you. 1914.18 is what I owe on the credit card. So again, you have a couple choices of what you want to do in regards to the interest that you've collected. Okay? And now that is it for this transaction here. And I think we are safe to go ahead and start a new journal. Okay, so now we are finally on journal number 23. And let's see what else is next. Okay. It says right here, we finally received a bill from the bank for the truck loan. Okay, so kind of similar ordeal here where we have the Maine Bank of Nevada gave us a loan statement. So here it says right here that the statement due date the statement was issued on the 30th. The number of payments you have left to pay is 36, right? We did a 3-year loan. For the balance is for 29,221.90. Due date is going to be the 20th. However, we agreed that it'd be 3% interest on top of it, and it's going to be accrued every day. So in this case, you racked up $73.05. So your new statement balance is $29,294.95. Minimum payment is $849.81. So, okay, in this case, we received a bill, okay, and our assumption is we are going to pay, we have to pay, right? There's no negotiations in regards to a loan payment. You can't just pick and choose what you want to pay. You have to pay the $849.81. But in this case, I received a bill. So, very similar concept to this, right? Because in this case, if I choose to, I'm going to pay for it later. I'm going to pay it on the 20th. Okay? So how should I journalize this?
You're gonna use a truck loan. Wait.
Mm-hmm.
Yeah, truck loan, interest payable, and then interest expense and checking.
Good. Not checking. We're not paying for it yet.
So accounts payable.
Correct. Okay? So in this case, can I use my loan to pay for interest?
No.
No. So in that case, this is one of the examples that you are actually not able to do that. While the previous one, you can because it's a credit card, right? It's tacked on there. However, this one, you can't use a truck loan to pay for interest. So this is going to be the alternative of what you have to do for this specific case scenario because it's a loan. You have to recognize interest as a separate account. Okay? So again, truck loan account number 2820. Interest expense was $64.50. Accounts payables 20,000. And interest payable is 27,500. Okay. So in this case, how much am I decreasing my loan by? How much did the bill say that I have to pay?
$849.81.
Okay. How much interest am I subject to pay?
7305.
Okay, good. Right? Since I'm not paying the interest yet, I'm paying it later. Interest payable. Okay. And of course, you can go ahead and put in your information here. Maine Bank of Nevada truck loan statement. Okay. So now I can go ahead and go to my ledger and fill all those things in. So first things first, truck loan. Bill. For 84981. So how much is your statement outstanding for now? How much is your total loans now if you're going to pay $849.81?
28,372.09.
Good. Okay. Since I'm already here, I'm just going to go ahead and fill everything in. So next one is interest payable. So again, truck loan 3% interest. June 23rd or 23rd page for 7305. So how much interest do I owe?
$101.34.
Mm-hmm. And then I'm going to tack on another bill. For $884.81. So then what is going to be my total ending balance in my accounts payable account?
$6,620.91.
Mm-hmm. Last account that we have here is interest expense. Okay. And this one is for truckload 3% on June 23rd for a total of $673.05. So you should get that same exact number as your interest payable for 101.34. Okay. And we're going to stop here for today. So that means Tomorrow we'll pick up on the adjustment entries. Okay. Tomorrow I'm expecting that us to be using the depreciation tables. So, okay. So let's go ahead, stay tuned, and we'll continue this tomorrow, okay?